Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Serabi Gold. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Andrew Cove, Vice President, Investor Relations and Business Development of Serabi Gold PLC, which trades on the OTCQX Best Market under the symbol SRBIF and on the TSX under the symbol SBI. Welcome, Andrew.
Thank you very much for that. Hi, everyone. It's a pleasure to have the opportunity to tell you about a relatively unknown junior gold producer, which is Serabi Gold, and I'm quite excited to tell everyone about, and hopefully it's an opportunity that you will all find compelling. To dive into it, here's our standard disclaimer page and forward-looking statements. I'm sure everyone has read. Okay, so diving into the story. We are a junior gold producer operating out of Pará State in northern Brazil, where we've been operating out of for about 20 years now with our flagship asset, the Palito Complex, which is a high-grade, narrow vein, underground, hard rock gold mine where we are chasing a swarm of veins rather than one or just a few veins. I personally like to call the Palito Complex our steady Eddie asset, a consistent producer of 30 to 40,000 ounces per annum over the past 10 years since its official restart in 2014, and consistently has been replenishing the resource after all these years of depletion. A story now is getting more interesting because we have a virtually de-risked growth plan where we expect to increase our production from the 38 to 40,000 ounces per annum today, which is our 2024 production guidance, to about 60,000 ounces per annum in the next 2 years, with production coming online from Coringa, which is our development project. Now, I say virtually de-risked because, number one, we have finally received our required permits for us to move forward with our production plan, which is to mine ore from Coringa, run the ore through an ore sorter, and yes, we are one of the few where it actually works. Then truck a pre-concentrate over to our mill at the Palito Complex for processing. And we don't necessarily have our full mining permit per se, but we are expecting to receive it sometime this year or potentially early next year, which won't necessarily change our mine plan at all once received. Number two, for why we are virtually de-risked, this expansion is being organically financed, as the cost for an installation of our classification plant, which is the combination of a crusher and an ore sorter at Coringa, is only costing us about $10 million. And the majority of that has been spent till date. Over to exploration, we have a land package that is largely underexplored. And now I think it will be helpful for you all to understand the story more if I immediately highlight that the Serabi story has long flown under the radar due to its production profile and market cap, and therefore lacked any capital markets relevance and support from investment banks, and therefore is a junior that up until now has been starved of capital to ever have an aggressive drill program. Reason being is because our transactions to date have mainly been financed with debt and internal cash flows, and therefore we've essentially used most of our historical cash flows to finance our growth, and subsequently only had a marginal amount of cash to historically drill out the next year of mine life, with the goal of simply replenishing what has been mined. However, our story is getting a lot more interesting now because we're finally turning a corner, given that the expansionary capex spend of $10 million is largely put behind us. And we've press released that at the end of August of this year, our current cash balance is sitting at about $16 million. We internally expect that this cash balance is only going to continue growing from here on out. And therefore, we can finally embark on an aggressive brownfield drill program to finally give the market what they want, a consolidated resource of at least 1.5 to 2 million ounces minimally, and an accompanying mine plan, which will eventually demonstrate a 100,000 ounce per annum plus producer at Palito and Coringa consolidated with over a 10-year mine life. That's going to be no simple feat for a junior underground gold miner. Now, I guess the best way to understand the story is I'd like to characterize it as phase one is us bringing Coringa online, and phase two of our story, to make this easier for everyone to understand, is with respect to our brownfield exploration program that we expect to launch in 2025 to ultimately delineate those ounces. Lastly, on exploration, with respect to greenfield exploration, we have a copper porphyry deposit on our property. However, more on that later. So on this slide here, key takeaways, they're on the top left-hand side. You'll see the historical and forecasted production profile that we expect to have by 2026. Yellow bars represent Paleto Complex, which demonstrates why I call it our steady Eddie producer. It's been doing between 30 to 40,000 ounces since its restart in 2014. And then you'll see the green bars being layered in from 2022 onward, which basically shows our production is expected to be supplemented with production from Coringa, which will eventually take us to the 60,000 ounce per annum level by 2026. And at this point, it will represent the maximum annual output we can achieve given our current infrastructure and grade available at both assets. And lastly, on this page is our management team. We've got one of the longest standing management teams in the region. Our CEO has been with the company for about 15 years, while our CFO closer to about 20 years, which should essentially speak to our ability of operating in the region. So over to our corporate overview before we dive into the guts of our story. We are listed on the OTCQX, we are listed on the TSX, and we are listed on the AIM as well. Given our current share price, what where it's trading at today, we currently have a market cap of about 80 million US. Taking a look at our balance sheet, those numbers there are as of June 30th. However, a more updated figure would be $16 million of cash as of the end of August, and our debt is still at the $5 million level. Over to the financials. If you just take a look at our ASIC is currently sitting at $1,782 year to date, which should come down by the end of the year. Reason being is our ASIC has been elevated year to date due to us having to convert to using a mechanized mining method in a certain part of Paleto, which is generating unavoidable dilution. And the second reason is because we've been accelerating our development at Coringa ahead of the commissioning of our classification plant, just so once we are ready to go, we are able to hit the mining as aggressively as possible from Coringa to begin supplementing our production at an elevated rate. So on this, we expect ASIC to trend close towards below the $1,700 range for the year. Moreover, on ASIC, we are a high fixed cost operation, given we have a camp which hosts of about 500 employees at any given time. They are on 2010 schedules and work 6 to 7 hour shifts, which is regulated by law. Therefore, our ASIC will have an inverse torque or inverse leverage as our production grows. So once we hit the 60,000 ounce per annum range, we do believe internally that an ASIC in the $1,400 range is quite possible. Over to the shareholders. We have two significant shareholders, which are Fratelli and Greenstone, and we do have a number of UK investment funds on our shareholder register as well. But a little bit more about our two key shareholders. We have Fratelli, which is a family office representing the Solari family, who own the Falabella department store um, in South America, while Greenstone is the mining private equity fund based out of London. Both shareholders are highly supportive of our story and are committed to our long-term growth strategy. And lastly, with respect to our share price performance, our share price has recovered since the days of 2022 when we were trading at much lower levels. However, that share price has since recovered since we have received our 3-year trial mining license in January of this year, through the release of our reserve for Paleto last year, which saw our mine life increase, and obviously with respect to the increase of the gold price. So our share price has recovered from the lows of 20p, and it only keeps on going as we are now at over 75p today. So this slide here is very useful because it'll give all current investors and potential investors who are new to our story an understanding of the region that we operate in. But not only that, it'll give you an understanding of exactly how we decided or how factors fell into place for us to be able to go to market or bring Korea to market with our current strategy. So to take it from the top, we are located in the Tapajos, which as of late has been garnering lots of interest due to our neighbors' G mining ventures and with respect to our other neighbors in the region who are on the hunt for copper porphyries. The Tapajos is an area the size of Portugal, and it's a region that's rich in gold mineralization. For example, it's the third largest alluvial gold field where artisanal miners have produced up to an estimated 30 million ounces to date, mainly targeting the saprolite, which represents on average the first 20 to 30 meters from ground until they hit the hard rock. Serabi has been in the region for over 20 years now, having put into production the first two hard rock mines, which is Palito, which is the red polygon closer to the center of the picture, and Coringa, the smaller red polygon down here. I'm not sure if my cursor is visible, but it's a much smaller red polygon down at the bottom. And now G mining with the third hard rock mine in the region, which is the peach polygon to the left of Palito. Now, this map is crucial in explaining our go-to market strategy for Coringa. When we had originally acquired Coringa from Anfield, which is now Equinox, back in 2018 for about $22 million, the game plan back then was to build a separate standalone mine at Coringa, which would produce between 35 to 40,000 ounces per annum. However, while going through the permitting process, once we received our LP, which is the license prior to getting the mining license, the LI, despite not being required by law, an environmental prosecutor had taken us to court demanding that we prepare an Indigenous impact study, which, given the laws pertaining to this, we were not required to do so at all. While being good citizens of the Tapajos, we decided to prepare one of these, of which the current status today is it's finalized, it's accepted, and in final review with the various government agencies. However, during these years of progressing our impact study, a number of changes and discoveries were made that have unlocked the current pathway we are currently taking with the development of Coringa. So first is this burgundy or maroon line, which currently intersects or connects both the Polito complex and Coringa. This is a federal road, which was at the time of our purchase of Coringa was just a dirt road. Therefore, the concept of us trucking any ore from Coringa to Polito would have been near impossible because trucking times would have ranged between 24 hours to 48 hours, depending on time of the year. However, once the Bolsonaro government came into power, the first thing that they had did was basically paved these federal roads to accommodate the massive growth in soybean farming to the south of the Tapajos in the state of Mato Grosso. When we had acquired Coringa, it was just a dirt path, and therefore the trucking times have basically dropped from 24 to 48 hours to just roughly about 2 to 4 hours. Secondly, to accommodate the soybean trade, the Bolsonaro government had incentivized all the locals to acquire trucks to aid in the transport of the soybeans along the federal road to northern Pará for transport to China by boat. So as a result, there was an explosion of trucks available for transport now, and as a result, the trucking costs were reduced from an estimated 4 grams per ton back then to under half a gram per ton today. So now at this point, the possibility of us trucking ore to Polito was getting a lot more economic and a lot more interesting. However, let me just jump to this slide over here to better illustrate this. So if you take a look at the bottom left-hand side, this picture over here basically shows you what the mineralization is over at Coringa. And essentially when we had received our trial mining license back in 2021 and finally went underground at Coringa, we actually were able to be welcomed by this, which is a very stark mineralization where all of the gold is in the quartz veins and the red is all granite and basically waste. Now I'm going to have to quickly flip here just to basically demonstrate to this. But if you were to basically take a look at this picture here on the far right, this basically demonstrates to you what the typical mineralization is like over at Toledo. It's a lot less stark, it's a lot more disseminated in the vein. And so at this point, when we had first initially gone underground at Coringa, we have already installed an ore sorter at Polito, which we have been using since its commissioning on the development ore to essentially minimize the waste process, which works well, but not super effectively. And when I say not super effectively, that is in comparison to Coringa. So over Polito, we have to pass our development ore through the ore sorter about 2 to 4 times to successfully remove a material amount of waste. So, given that we have had the ore sorter in place at Polito, what we did was process truckloads of ore from Coringa at Polito using the ore sorter and discovered that due to the stark nature of the mineralization, the ore sorter was super effective, providing us with recovery rates in the 95% range. Therefore, we decided to bring Coringa online by instead of building a standalone plant to install a crusher and ore sorter only at Coringa to pre-concentrate ore and have it processed at Polito. So now when I say pre-concentrate, essentially what will happen is we will take roughly 500 tons of ore from Coringa, which is diluted of 6 to 7 grams per ton, pass it through the ore sorter where it'll emerge at 250 tons or an estimated 250 tons of ore at something closer to the in situ grades of between 10 to 13 grams per ton, which will then basically be trucked over to Polito and will be used to supplement the head grades over at Polito, which essentially should increase this to about the 8 to 10 grams per ton range. So that in a nutshell is our strategy going forward. I will leave this slide for everyone to go over on their own accord, but the takeaway is, given that we are operating in the Amazon, we are extremely committed to top tier ESG practices and have been, and given we've been in the region for for over 20 years, has provided us with a strong social license. And the next slide over here is one that I'd like to present to everybody. And we've basically comped ourselves on a greenhouse gas emissions basis against the majors. And essentially, the key takeaway here is Serabi produces far less greenhouse gas emissions in comparison to the majors. If you just take a look at the top slide or the top graph, we are essentially in the top quartile. And that is by virtue of the fact that we are underground, we have a small footprint, and we pay strong attention to ESG here. Okay. So, okay, so this slide here explains the ore sorter situation at Serabi. So we currently have one functioning ore sorter installed at Polito, which sorts on color and density, which we use to remove waste, ultimately liberating plant capacity and increasing our head grade. So if you take a look at the bottom half of the page, here's some statistics to date. The ore sorter has processed about 87,000 tons of development ore at 1.86 grams per ton, and essentially turned this into 12,000 tons of ore at about 10 grams per ton, while rejecting the rest of the 76,000 tons of development ore grading zero point 0.7 grams per ton. So it was with this ore sorter where we extensively tested the ore from Coringa, which informed our decision to purchase our second ore sorter to be installed and commissioned at Coringa, which is expected to be fully online by Q4 of this year. Okay, so over to brownfield exploration. We get asked the question all the time, what's your mine life? And given we are a junior with a history of being tight on capital, we've never had the benefit of drilling out a resource to give us a much longer mine life than essentially just replacing what was depleted. So take a look at the below. Back in 2005, we had a resource estimate of 405,000 ounces. And fast forward to our latest resource estimate in 2023, we were able to demonstrate 532,000 ounces. net of 414,000 ounces of production to date. Therefore, as we move into phase two of our strategy, our goal will be to increase this 532,000 ounces to about 1.5 to 2 million ounces. And this should not be a problem, given Toledo sits on an 8 kilometer trend with about 50 veins that we currently know of that are all open laterally on strike and at depth and haven't really been aggressively historically drilled out. Brownfield exploration at Coringa, admittedly, is something that excites our management team a whole lot more, given it's got a materially higher geological payout than Toledo. Therefore, the bulk of our exploration efforts for 2025 and 2026 will inevitably be focused on Coringa. And reason being, take a look at the picture below. Uh, Coringa sits on an 8 kilometer trend with about 1.5 kilometers of artisanal workings. Now, it may be a little hard for you to see this, given I guess just given the size of the font here, but there are essentially about 8 artisanal mine workings along this corridor. If you take a look at the left-hand picture, so if you take a look at the right-hand picture, it's essentially a map of the same area, and essentially what we had did was to confirm the mineralization. We had done geochemistry and geophysics, and it essentially just demonstrated what we had suspected all along. So you could see in this black dotted line, or these black dotted lines, that there's a structure in the corridor. And so historically, when miners operate in a region with artisanal miners, the usual strategy is to just basically find where the artisanal workings are and to just drill further deep down where they are. However, given the reconnaissance work that we had recently done to demonstrate that this structure is continuous, we do plan to not only drill further deep down in artisanal workings, but actually in between the artisanal workings as well. So it's definitely one that are more excited about, and we would not be surprised that once we hit the 1.5 to 2 million ounces of consolidated resource in the next 2 to 3 years, that the bulk of it is going to be sitting here at Coringa. And this essentially takes us to phase three of our strategy, and that's where we'll be at the additional capacity. Will that be through adding an additional ball mill at Palito? Will that be through building a full plant at Coringa? Our exploration success over the next 2 to 3 years will dictate this and ultimately get us to over 100,000 ounces per annum. So over to greenfield exploration. On this page are 7 of our high priority greenfield exploration targets that we have identified and have yet to be properly drilled. Out of all these, Matilda and São Domingos are our top two. So São Domingos first. São Domingos first, back in 2021, we drilled a massive intercept to the tune of 7.15 meters at 258 grams per ton, which was the 7th best gold intercept that year. And now that we have the funds to do so, we finally plan to further drill this target next year. So stay tuned for the follow-up drilling there. And over to Matilda. So for those who aren't caught up with our story, back in 2022, our reconnaissance work pointed towards this potentially being a copper porphyry style mineralization. We put a drill hole in and confirmed our assessment. And from here, given a junior gold producer should have no business in drilling out a copper porphyry deposit, we shopped the opportunity to the majors at beauty contests, and of them all, we selected Valley Base Metals to form an exploration alliance with us, where in their first year, they would spend $5 million on exploration across these 7 targets. And at the end of the year, can decide which one of these targets they would like to JV with us. However, at the end of that $5 million spend, unfortunately, Valley Base Metals did decide to walk away. And, and the reason being was because, internally, from our perspective and our understanding, they were just looking to clear the decks prior to the arrival of their new CEO and CFO. And so therefore, to our knowledge, there are a number of exploration alliances and exploration partnerships that they had essentially walked away from, including us. However, the results of this $5 million spend, we were able to delineate an unofficial resource estimate of 81 million tons at 0.28% copper at Matilda, including a higher grade core of 21 million tons at 0.40% copper. So it's definitely got economic grades. However, it's still quite small, and currently where we sit with the potential exploration alliance, we did have a number of companies come to site during that beauty contest back in 2023, and we had essentially reached out to a number of them. So as of this year, we've already had a number of companies come to site, and we are working towards potentially announcing a new exploration alliance to essentially move our greenfield exploration forward. So, our greenfield exploration as it sits today is the most exciting as it's ever been, and it's definitely one to watch for the future growth of our company. So, given we don't have much time, last slide, I'll just leave it here. Based on comparables, we are trading on the lower end of our peers. Now, I'm sure almost every other company or junior mining company that's been presenting to you is going to tell you that they are cheap versus their peers. However, I challenge you to take a closer look at us specifically and to derive your own valuation. And hopefully you will agree with us that we truly are a compelling investment opportunity. So I thank you for your time. Move to the last slide. There's our contact information. Should you have any questions or like to speak about Serabi in greater detail. Thank you. And I think I'll leave it there for Q&A now. Okay, so first question. Does the company need financing? Of what kind? Equity, royalty, offtake? So to answer this question, where we stand today, the company does not require any financing of any sort. As we saw previously through the slides, at the end of June, we had a $12 million cash balance. At the end of August, that grew to $16 million. And internally, management just believe that the cash balance is only going to continually growing for the rest of the year, given the majority of our expansionary capex has already been spent. So therefore, no need for financing there. Okay, so next question. Do you still expect the receipt of your LI to be this year? That is a very good question. From our perspective, we can only push the government agencies so much. And we are currently being guided by our advisors and legal counsels that we can potentially expect to receive the LI this year or potentially early next year. However, I'd like to remind everyone that the receipt of the LI is not going to change our story at all. We have received the trial mining license, which essentially allows us to execute on our growth plans to 60,000 ounces per annum by 2026. These licenses, by historical measure, have generally been easy to renew. And these licenses are generally awarded for 1 year at a time. However, specifically to Serabi, we were given a 3-year useful life on this license, which essentially, in my opinion, speaks to the support we have from the associated agencies. The only difference is once we receive our LI, it will simply provide Serabi with the optionality to build a full process plant at Coringa, which won't be of importance until we hit phase 3 of our growth plans, which won't be for another 2 to 3 years. Okay. Looking at the next question here. Okay, so can you speak to the timeline for reducing AISC and production growth to 60,000 ounces per annum? Yes. So essentially, internally, the way our models are currently forecasting this is we expect to finish AISC at the end of this year at the $1,700 level. However, by 2026, ceteris paribus, when we hit the production levels of 60,000 ounces per annum, we do expect our AISC per ounce to drop closer towards $1,400. However, if we are to expand production beyond 60,000 ounces per annum, then effectively we could only expect our AISC to go much lower than $1,400. And I guess given the amount of time we have, I'll end it with the last question here. And it's when do you expect to release your updated Coringa pre-PEA? And the answer to that is imminently. Please stay tuned for that, everyone. Perfect. I'd like to thank everyone for their time, and I look forward to speaking with a number of you in the one-to-one sessions following this. Thank you very much.